Hey everyone, Trader Tim here, bringing you another Monday market analysis. Today's Monday, March 23rd, 2015. Today's video is going to be short and sweet, and I want to outline how to identify or know when the coast is clear, essentially, after we get kind of caught in a sideways consolidation or stuck between a 50% long and a 50% short. Last Wednesday, we had the FOMC meeting announcement, and that subsequently sent the market higher, and we've seen some great technical trading in the days following, and I would look for that to continue. Obviously, here now we've broken the short, that 2085, the 61.8. We've broken that short, and now the long below us is what we're considering valid. 2040s up to 2150s is going to be the target. So I would expect some resistance here, and you can see that with these topping tails, meaning that the market traded up to a high, and then before it closed, it sold off. And you can see that these highs of the day for Friday and then today, Monday, were right within the prior highs up here, but then we sold off to the bottom end. If we were to, let's see, kind of block, oh, wrong one here. If we were to kind of draw a trend line here of highs, and you can see how the highs kind of line up with the bodies of the candles, and then where we closed was down near the tails of these prior highs. So there's a little bit of resistance here, but I don't anticipate that it will send us lower and bring us down to break the 2020s. Our line in the sand for failure is now 2060s, and if you're long from lows, if you're long from 2040s, the kind of most conservative place to keep your stop if you're trading on a daily overnight basis would be that 2060 level. Now let's zoom in, and I want to talk about what happened as we bounced off of lows. And let's see, 15. So I've got 24 hours worth of data showing, and I'm going to flip over to the trading hours only here in a minute. But 2 weeks ago, we broke, when we came down to the 2040s originally, we tested once, had an initial reaction, twice initial reaction, and then we broke through 2040s, and then we came up and we broke the 15-minute short, and that set up a nice 15-minute long that took us higher, and then over the weekend, Sunday open, gap down, and then we traded down below once again into the 2040 level, into kind of the long that we had down here at lows. And after we kind of made a double bottom, little double bottom down here, we broke the 15-minute short, and we went into 15-minute longs. And I'm not too concerned with this price action right here, because if I flip over to the trading hours only, you can see that there wasn't really an opportunity to get in. Now, if I look with trading hours only, the short was broken overnight, and then we gapped up the next morning, so there wasn't really an entry on the initial launch, if you will, the initial break. This double bottom, we did break the 61.8 right at the close, right at the end of the day, and then we came down into a very kind of end of the day, last minute, 15-minute retracement. So not a trade that you can kick yourself for passing on, because it's right at the end of the day. But what we have now, and knowing that we're at these lows and we want to get either long at lows or short at highs, like we were talking about last week, but also knowing that the FOMC meeting announcement was coming on Wednesday, it was okay to kind of be patient here because while things, ended up going pretty cleanly to the upside, there's certainly a lot of room for chop. So once the FOMC meeting announcement came out on Wednesday, we rallied pretty hard, and then we broke the 2085s, which is right about here. So we broke the short. It wasn't until Wednesday that we broke the short, and that confirmed that the long below us, that 2040s, is now valid. So really, if you're waiting for that failure, the first long setup that we had that was within trading hours only was back here on the 19th, and we had two tests, but we didn't break through that 2076 level. So an opportunity to get in, and if we go back to the daily chart, that's essentially getting in on the on a longer time frame position. While there's plenty of opportunity to take trades on the 512 tick chart right around this 2040 level, and then get in and get out. Looking at things from a bigger perspective of where are we on the 15-minute chart in relation to the daily chart, what's going on as we break the short. Now we can expect that the market would either come up to this 2010s. We didn't quite make it to the target, so I would anticipate either overnight or in the next day or so we would drift a little bit harder to 2010s. But it's certainly possible that we don't make it there and we pull back to 2091s, and that is the next 15-minute long setup. And like I said, pulling from lows to highs, our line in the sand for bullishness is now 2064s. So that's kind of what I'm looking at when we're stuck between two 15 minutes on the dailies. We want to be stuck between two 50% rather on the daily chart. We want to be taking shorts up at highs and longs at lows. But once we came up here in this, we didn't really have another retest of the short because this big candle here is the FOMC meeting announcement. So the longs at lows were the valid trade, and that has taken us up to break the 2085 short. So going forward, targets on the ES up at 2150s. I don't think we'll get there certainly in a week or two, but longer time frame over a couple of months, probably taking us into May, just given that we're kind of at the end of March, and then we've got April and May of really great trading, and then kind of Memorial Day, you get a little bit of a slowdown after that. Traders go on vacation, the kids are out of school, and so the summertime can be a little bit lower volatility, but really, really technical markets. So I'd look for some really volatile or larger moves to be occurring between now and the end of May, and then things to kind of slump off a little bit and volatility to shrink a little bit more in the summer, which makes for really great swing trading as well as technical day trading. You just don't have the larger moves that you see in the spring and fall. So with that, I hope you have a great week. As always, you can catch more at the blog, emoneymind.com. And if you have questions, shoot me an email, tim@emoneymind.com. Thanks. We'll talk to you soon.